Welcome to the Preparing for Your Retirement presentation. This information pertains to WRS employees within 5 years of retirement. By the end of this presentation, you will be able to explain how the WRS retirement benefit works, recognize eligibility and prepare to apply for benefits, identify the different types of annuity options, prepare for living in retirement, and find additional resources. Let's start with how your WRS retirement benefit gets calculated. When it comes to calculating your benefit, ETF does two different calculations. The money purchase calculation is based on your age at retirement and your account balance, whereas the formula calculation is based on your years of service, 3 highest years of earnings, employment category, and your age at retirement. We run the calculations both ways, and you will be paid the higher of the two benefits. At any time, you can complete an unofficial estimate of your benefits by going to the WRS Retirement Benefits Calculator. Just go to etf.wi.gov, hover your mouse over Retirement, and click Calculators from the drop-down menu. You will need information from your most recent annual statement of benefits to use the online retirement calculator to estimate your retirement benefits. All the information you will need is located in Section 6, Account Summary, which includes your years of creditable service, your 3 highest years of earnings, your variable excess or deficiency, if you participated in the variable fund, your money purchase balance, and additional contributions if you made them. Once you've entered information into the WRS Retirement Benefits Calculator, you will receive a retirement calculation that looks like this. Based on the information you entered, factors used in your calculation, your estimated monthly benefit amounts including additional contributions, and if you are eligible for a lump sum payment. You can save or print the results and create multiple calculations with different retirement dates. This can help you determine a retirement date that will receive the largest benefit. Speaking of retirement dates, let's look at when you can retire. To be eligible for a retirement benefit, you must meet all 3 criteria. That means you must be minimum retirement age, which is 55 or 50 if you have protective category service. You must be vested and have terminated all WRS employment. If you can check off all 3 boxes, then you are eligible for your retirement benefit. The minimum retirement age for most WRS employees is age 55. Keep in mind that if you retire and start receiving a benefit at age 55, before your normal retirement age, this benefit will have an age reduction. If you are age 57 and have worked 30 years of service, you can retire with no age reduction to your benefit. Or if you retire at normal retirement age, which is age 65, there will also be no age reduction to your benefit. To find your age reduction factor, use the WRS Retirement Benefits Calculator. Vested in the WRS means the point you may retire with your full WRS retirement benefits that include your employee contributions, your employer contributions, and any earned interest. In order to receive your full benefit, the WRS has participation requirements that you must meet. If you were hired on or after July 1, 2011, you must have 5 years of creditable service. If you were hired before July 1, 2011, you are vested as soon as your employment started. If you do not meet these requirements, you may only receive a separation benefit. That includes only your employee contributions and earned interest. When considering what date to terminate all WRS employment, keep these terms in mind. Your termination date is the last day that a member can say that they are an employee of a WRS employer. Your benefit effective date is the date you begin being paid as a retiree. Generally, your benefit starts the day after the termination date, which is listed as earliest possible date on your ET 4301 retirement estimate and application. Inactive status is your status during any period between your termination date and benefit effective date. This means that if you die while you are inactive, which means you are not working or collecting a retirement benefit, your beneficiaries will lose the employer portion plus earned interest of your WRS benefit. Keep this status in mind when choosing your termination date and benefit effective date. Inactive status is especially important to keep in mind if you are a teacher. Many teachers get paid through the end of summer and may consider postponing their benefit until the end of the summer. That would make a teacher inactive from their termination date to their benefit effective date. The risk of inactive status would be losing half of your retirement benefit if you die during that inactive period. This means your beneficiaries will lose the employer contributions plus interest portion of the retirement benefit. If you are teaching summer school, you are still employed, and your termination date is the last day of summer school. Check with your employer to determine your final day of employment. Now you've learned about how to estimate your retirement benefit and when you can retire, let's look at some factors you should consider while preparing to retire. Your WRS retirement benefit, when combined with Social Security, is intended to give you a retirement income that is 50 to 85% of what you earned before retirement. This percentage comes from a full career, 25 to 30 years, under the WRS. Therefore, you will need to think about other income for retirement to reach your pre-retirement income. Other sources of income could include savings, IRAs, or other tax-deferred accounts, such as Wisconsin Deferred Compensation, post-retirement employment, or additional contributions to your WRS retirement benefit. Additional contributions are extra post-tax dollars that are above and beyond your required contribution amount to the WRS. If you participate in the variable fund, 50% of your additional contributions will go in the variable fund. Additional contributions get invested in the same funds as your regular WRS benefits. Additional contributions must be deposited before the end of the business year before you will earn interest. They also must be received before your termination. You can also leave them in the system after you retire until the required minimum distribution age, and they can continue to gain interest. Another method of enhancing your benefit is buying certain types of service. If you have ever taken a benefit from the WRS before you were eligible to retire, this would be a separation benefit. You can buy back the service that you forfeited. If you worked for another public employer that is not in the WRS, like a public school in a different state or the federal government, you can buy that other governmental service. Both types of service purchases must be done while you are an active employee. Please call us for a service purchase estimate if you have any of this service and are interested in learning more about your possible enhancement. Speak with your employer to determine the type of life insurance you have and how it will work in retirement. If you have the group life insurance program through ETF, then it will automatically continue and be deducted from your annuity. This is another cost to consider in retirement. Health insurance is a significant cost to consider during retirement. Speak with your employer to see if health insurance is available to you when you retire. Find out what costs are involved and if your employer can pay some of your healthcare costs into retirement. When you retire, you may become responsible for the entire health insurance premium if your employer does not share in health insurance costs in retirement. If you have the group health insurance program through ETF, it will automatically continue in retirement until we receive written notice to cancel. If your annuity is large enough, it will be deducted from your payment. If your premium is larger than your annuity, you will pay the health plan directly. Also keep in mind that health insurance costs can go up every year. Consider whether to cancel your variable fund participation before retirement. Staying in the variable fund when taking an annuity will affect your benefit amount each year based on investment returns. Before applying for retirement, look at your variable performance in Section 6 of your annual statement of benefits. When you take part in the variable fund, your account has either a variable excess or a deficiency. This is the difference between your actual account value and what it would be if you never took part in the variable fund. A variable excess is the amount you are ahead. A variable deficiency is the amount you are behind. This will help you determine if you would like to cancel your participation. Let's look a bit closer at how this affects your annuity payments. The core trust fund annuity has a guaranteed payment called the core floor. This portion of your payment will never go below the core floor amount at your retirement, no matter what happens with the previous year's investment performance. Any yearly positive or negative annuity adjustments will be made beyond that core floor amount. If you are in the variable fund, your payment will have a core portion and a variable portion. The variable portion of your payment feels the full effect of the returns and may go below your initial payment amount at retirement. There is no guaranteed payment for the variable half of your annuity. To help you decide, watch the variable fund video or attend a webinar for more information and resources regarding this topic.